Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information. Doug, welcome to the Australian Investors Podcast.
Thanks for having me on, Owen. Appreciate it.
Should say welcome back because you are a repeat offender. You have been on the show once or twice before, and your episode, I think it was maybe this time last year, maybe a bit earlier, was one of the most popular because when you come on, we get to talk about companies, we get to talk about technology, ETFs, and basically what is happening across the entire country and globally with investors. And so we're going to talk about some of the most frequently traded ETFs, shares, that sort of stuff as we go through. But we also get a chance to talk about technology, which is probably where I'm most interested in going today. But for folks who haven't heard about you or Sharesight, can you give us the bird's eye view, Doug? We were just talking off air about how far Sharesight has come under or during your watch, so to speak. So can you give us a sense of the business, what you do, who you help?
Sure. Yeah. So Sharesight's been around for, it was founded in 2008, sort of in the depths of the GFC, if you can believe it. Founded by a father and son over in Wellington, NZ originally, and I joined in 2013. So it's been a while. We've gone from just a couple of people to a staff of around 50. What we do, really, it's an investment tracking platform. So we help investors organize all their investment data. So we pull in data from the brokers. We help them understand the impact of their dividends, capital gains, Forex, and so forth on their return. We also provide analytical performance reports, and then we provide the tax reporting as well. So you can kind of think of us as like the anti-platform platform. We really were a response originally anyway to the more expensive but traditional investment platforms that charge asset-based fees that are used by advisors. So we basically said, you know what, we can replicate that technology. We can sell it direct to the investor base. So it's a B2C model, and we can do it in a freemium SaaS business model, not to use too many acronyms in one sentence.
No, but it's really come a long way since the founding in the GFC, but also since your involvement in the business, and it's been really interesting evolution to watch it over the years. I remember back in the day, Doug, the thing that was like it's so important for people to understand. If you're newer to investing and you don't understand this context, before Sharesight, you would basically get like the trades from your broker, unless you were seeing a financial advisor, which you alluded to is a little bit different, but you basically get the trades and then you'd have to use an Excel spreadsheet. Some people I'm sure were using a piece of paper and then trying to adjust to the accounting rules to try and figure out like what your tax liability was. And obviously then there's franking credits and then there's all this other stuff that goes into it. Can you maybe, like, obviously since then the platform has evolved in a huge way. It's been a lot of development and things like that. I'm curious, like, what are the most popular tools being used by investors now?
Sure. So it's always going to be about performance first and foremost, unless you're talking about a tax time in one of the countries that we have tax reporting in. But it is always about performance. And so whether it's the homepage, which is the overview, which is a glorified performance report, or the performance report itself, those are always the most heavily used. Following that, people, of course, like to look at the asset allocation, which we call diversity reporting. I'd give an honorable mention to contribution analysis, just because that's one of my favorites, which basically shows performance attribution. And you can do so at an asset class level, in a custom group level, or even at the underlying holding level in terms of all the holdings in your portfolio. But then increasingly, our ETF stuff has become really, really popular, just given the rise, frankly, of ETFs and their growing popularity. The one there really is the exposure report, where we'll show an investor the exposure they have to the underlying companies in the ETFs they own, and we'll also call out if there are overlaps, of which there are a lot in Australia. So, you've got a lot of people owning, VAS and also the Vanguard High Yield ETF, and there's just a heck of a lot of overlap in there. And they may already own, your traditional blue chip, dividend bearing shares on the ASX as well.
Yeah, so they could have CBA in all of them or BHP,
Yeah.
and then even further down the cap table as well.
Like, I think I own Apple in like 15 different ways personally. So
yeah, and that's really hard to get that data. I mean, you can do it, but it's so hard. Like the ETF providers themselves have like different ways of reporting.
they
So
do.
even if you're an Excel wizard, you can kind of like go to the iShares website and go to IVV or BetaShares NDQ, and then Globalex Fang, and all three of them will use a different, like, I guess, lexicon for describing like which holding. Like, is it ASX, CBA? Is it dot, CBA ASX? Like, it's just like, and then you try and compare it, and you just like, oh gosh.
Yeah, it is hard, and they release it at different time intervals, and it's difficult.
Yeah. So you guys handle that complexity, which is pretty cool. The other thing which we'll talk about, I'm sure, is like the ETFs themselves, because in our community, Doug, that's like a massive thing that's underway. And we see that as like, that's like a trend that seems to be like not stopping.
Yeah.
And you guys have adapted to that, right? Like since like say 2010 to now, the proliferation of ETFs has been incredible. And I imagine a lot of your cohort, you're seeing that mix in the data, right?
We are. I mean, ETFs, I remember. So when I interviewed, I began my career in investing with Morningstar, the research company in the States, as you can tell from my accent. And I remember I was interviewing for an internship, as you do there, way back in the day. I won't date myself too much, but I remember I got some advice from somebody that I knew who worked there, and he said, go to the ETF tab on our website and read everything you can about that, because you're going to be interviewed about ETFs. And I remember thinking, that's really weird, because like Morningstar, especially in the US, was all about mutual funds, and the star rating, right? But ETFs were, on the come. This is, again, 20 years ago. But they were on the come then. And I saw what happened in the US with ETFs, just starting to eat into those asset flows, both for financial advisors and individual investors. And it took a bit longer for that to happen in Australia. I think when I joined Sharesight, we had, I want to say it was 6% of our customer base owned ETFs. So that's not a valuation remark. That's just a 6% of our total population owned an ETF. And that number now is like 35%. So it's gone up and up and up over time. That's significant because a lot of our population tend to be stock pickers, right? In a more traditional sense. But we have adapted. We've brought in a lot better data feeds for those gnarly ETF distribution components that if you own an ETF, you know what those hideous registry statements look like with all the components of those distributions. We've built a new plan type that caters more so to ETF investors. And as I mentioned too, we've got the exposure report as well. So lots to be done with ETFs.
Yeah, and how you guys have adapted. I think that, I have this kind of widely held view that, and we'll talk about some of the platforms too that are like bolting into Sharesight and allowing you guys to visualize that data more quickly, more efficiently. But some of the newer platforms seem to be, like $9 out of $10 or nearly $9 out of $10 that are going into those investment platforms are going to ETFs. And we often have this kind of like rule of thumb, Doug, on the show, which is that most people that build a core and satellite portfolio are typically in their core predominantly using ETFs. And that typically for most people is like, as a very rough rule of thumb, is like 80% of their wealth. And I think we're starting to see that in the mix now, at least from our side and what people are telling us. So every month you guys put out these wicked reports that summarize what people are doing in terms of what shares they're investing in, what ETFs they're investing in, just what investments they're making. And you also do the similar type of thing for different types of trends and things that are happening, and they're all available freely on the Sharesight website. Pardon me. But I've got some data here, and we did this, you and I did this, I'm going to say it was a year, maybe 18 months ago. I don't know exactly. I'll put a link in the show notes, but I remember when we did this at the time, we saw some interesting things here, but not to the extent that we're seeing them today. And I'm referencing data from October 2024 that you guys have produced. And the top trades, because it includes ETFs, Aussie shares, US stocks, that sort of stuff as well. The top trades, I'll go through them. I know it's going to seem like a long list, so I'll just try and use the ticker symbols for people that are familiar, or just explain them. But we've got the VAS ETF Vanguard Australian shares, VGS, that's the Vanguard Global shares, IVV is the iShares S&P 500, NASDAQ, which is NASDAQ 100 ETF from BetaShares, VDHG, which is a diversified ETF from Vanguard, Woodside Energy is number 6 on the list, A200 from BetaShares, which is the Australia 200 shares, Fortescue, BHP, NVIDIA is the most traded US share, DHHF, the BetaShares Diversified All Growth, VHY, which is what you referenced before, the high yield Aussie shares, Min Resources. There's a fair bit going on with that business lately, so that makes sense. Pilbara Minerals, that's PLS is the ticker symbol. Tesla is the number 2 on the list. There's only 2 in the top 20, actually. VTS, Vanguard US Total Market, VEU, Vanguard All World ex-US, IOZ is the iShares S&P ASX 200 ETF, Westpac, and Wesfarmers. So now this is just my data, right? I'm going to be interested in your thoughts here, Doug, but I noticed that 11 out of 20 of the most traded things, I'll say in Australia, you'll say probably with your customers, but I'll say you guys are the most representative of the country, are ETFs, and only 2 are US.
Yep.
So that means that there's only 7 out of the top 20 things are shares these days. So I'm curious what you make of this data.
Yeah, this is actually probably the most heavily dominated list I've seen in terms of ETF representation ever since we've been publishing these these stats on our blog. Yeah, like this is pretty shocking. And you can see also what we publish is the skew of sells to buys. And everything on this list is heavily bought as opposed to sold. NVIDIA is a bit more skewed, but that's more specky. Obviously, more day trading baked into that result. But it's just remarkable. And I guess if I was to make a comment on it, I think that investors right now are almost like willing themselves to be bullish because of events that have happened with the election in the US, because they're just tired of inflation. They want interest rates to come down, at least locally. And they want to be invested. They want to be in the market, but they're not quite sure where to go. And that's where I think they're just saying, well, we'll just go long on VAS or NDQ and we'll just kind of let it ride. But I'm a little bit too scared to maybe pick certain stocks given some of the volatility we've seen, I'd say uncertainty we've seen, and frankly, the fact that, the Mag 7 or whatever is the latest, trend to talk about those tech stocks that have pulled the market to where it is. It's kind of like buy those or just buy the index. It's sort of, a similar result either way.
Yeah. It's interesting that, October was a very interesting month, as you said, with like the US election.
Yeah.
So just to recap on the top 5 from folks: VAS, VGS, IVV, NDQ, and VDHG. For those of you watching on YouTube, you can see the full list. But as you said, over 9 out of every $10 here is a buy, not a sell.
Yeah.
And like you said, that's a big bullish skew. And it's probably also representative of a lot of Australians dollar cost averaging into these core building blocks of a portfolio. And I feel like, I don't know, interesting to get your take on this, Doug, is like to think about if this could be representative. Like, say, for example, right now, like it's obviously quite bullish. It's quite interesting to see so many ETFs. But if you were to, kind of look into your crystal ball and 2 years hence, do you think that this would be normal? Like, do you think that more ETFs, that's the trend in these monthly reports that you see?
I think it will be, but it's important to note that this is based on number of trades, not value of trades, right? And so I think what you're seeing here is that newfound enthusiasm that was created, of course, during the pandemic, and that has kind of persisted, frankly, I think because of, at least locally, because of the lack of housing affordability. So you have all these younger investors who want to save, they want to get, more than they're going to get in a bank account. And so they're just investing on these new platforms and they're going into ETFs. And so it just dominates the count of those trades, not necessarily the wealth. So I do think you'll see that. And maybe that's why we'll pivot and we'll start showing, value or fund flows, right? Money flows from X to Y, which I think might provide a lot more value for our readers of our blog. But, it is saying something though, that like Woodside is up there, right? Amongst those gigantic ETFs. And that really is representative of, I would say kind of our classic customer who is really looking for those fully franked, really juicy dividends inside their SMSF.
Yeah, that's true. Like that, and I don't know. Do you what do you think about in terms of the tools that you offer for those different types of people? Like, is there any mix in the what people value? I know that's kind of like just a very wishy-washy question, but like, do you see them using different tools?
It's funny. It might be easy to think about like, oh, the more money somebody has invested, the more advanced their usage will be, or the more reports or tools they'll use. It's really not the case. We have some of our largest portfolios, our biggest customers would be very basic customers who would be, buy and hold, just reaping the benefits of those frank dividends. They're probably looking at the overview page and they're looking at the taxable income page, which is the dividend page, right? And then you might have some of your really keen newer investors who are kind of all over all of our tools and reports and things like that. So it kind of goes towards the style of investor as opposed to the level of experience or wealth, I would say.
One of the questions I wanted to ask you is maybe if we zoom out of just October then and those most traded shares and ETFs, is just like in general over this year versus like maybe in years gone past, are there any trends or any themes that you see, even if they're not every month or every quarter, but more recurring in nature? Obviously, we talked a little bit about ETFs, but
Sure.
is there anything else that you see in the data?
Yeah, I mean, so the ETF trend is one we talked about. The other one that we've seen is just the dominance of specific US names in the data as opposed to those classic Aussie names. That has been a shift that has occurred for us over time.
Interesting.
And keep in mind that we have customers in the United States, but we don't have a fully end-to-end platform in the States. We don't offer tax reporting, for example, in the US as yet. So it's not as if you've got a whole bunch of American investors skewing the data. This is Aussie investors predominantly going directly to those US names. And so, yeah, I mean, normally what you would have seen is Apple, Microsoft, Tesla, sometimes Salesforce, some of those big, well-known tech brands tended to start dominating these charts through time. Yeah, for sure.
Interesting, because like for me, it's quite interesting, like to have all that data at your fingertips to see what people are moving towards and see how, like you said, there's like a lag maybe between the US and Australia. I remember when I was studying technology at uni, my professor was from the US and he said, basically, we just do whatever the US does with a 5 to 10 year lag. He was kind of right about what the things that he was talking about. But I also do tend to see that in some respects. There are obviously nuances and key differences between the two markets, but I kind of do see that as really indicative of where we could get to. Like if you're saying of total customers, nowadays it's more like 30% plus have ETFs in their portfolio.
Yeah.
Like how long until that goes 50 plus, and that type of thing like that. That's really interesting because, and maybe not, maybe you see that not happen, in which case then maybe people are reassessing, and that's kind of really interesting in the data. One of the things actually, Doug, that you guys do really well, which I alluded to, was not just around the specific investments that people are buying, but also the platforms that people are buying. And I saw this celebrated a little while ago. Got the data here from, there's a top Aussie brokers report, which is then broken down again, top Aussie brokers report for ETF investors or like ETF trades and what have you. And I saw this being celebrated by like the guys at Perla, who, full disclosure, are sponsors of our Australian Finance podcast. And the top Aussie brokers for FY23-24, according to Sharesight data, is in order: CMC Invest, Perla, Comsec, Southwealth, Stake, NabTrade. I think the key distinction here is like CMC is like way ahead of the pack in terms of the data that you guys collect.
Mm-hmm. Yeah, they are. They are. So what's interesting to note here is that this is influenced by the connection we have with these different brokers. And
Right.
CMC has done a really nice job. They built a really seamless integration with our API. So a couple of clicks from their platform to ours, all of your historical data is ported through. CMC, they've been in the market for a long time. Well-funded overseas broker who is a non-bank broker, an independent broker, right? So they've always had a bit more flexibility to work with companies like ourselves. And they began working with us 10 years ago. So, we were a small outfit at that time, but they were willing to do it. And that therefore shows up here in the data. But you mentioned Perler too. Yeah. Perler, we also have an API with, and they what's interesting about the data that we look at, when markets go up, our signups tend to go up. When they go down, they tend to go down. We track the performance of the local and the overseas indices quite closely. And we see that information really flowing through in all respects, engagement on the platform, conversion rates, and what have you. There is certain anomalies to that data, and Perler are one of those. They always send through a good number of customers. Those customers tend to be quite interested. They tend to be quite experienced investors or newer investors who are doing the ETF thing, as you described as well. So they're almost a really cool zig to the zag.
Interesting.
Partners we work with.
Yeah, because on your top Aussie top brokers for ETFs, like the choices that are integrating to the Sharesight platform, CMC Markets, Perler, CommSec, Self Wealth, not far behind CommSec, Stake, quite a bit of way behind that, and then NabTrade down the bottom. But Perler really is punching above its weight there. And I was so surprised to see it ahead of CommSec. But the CommSec integration, if I'm not mistaken, Doug, is like a CSV file where you have to like drag it. And it's the first one, and then once you get up and running, you're good to go. But it's just it's not native, right?
That's correct. That's correct. So you've got to import your historical trading file, which is easy to do, and then we'll capture the ongoing contract notes from there. But yeah, without that, automatic seamless integration, I mean, it's 2024, right? Like people want it to just work. So yeah, it's exactly right.
Yeah, and it's interesting because like we talk about like I'm not here to bash, neither of us are to bash on CommSec, but they took a while to get to the kind of like putting ETFs in there in the mix as well as shares and making that really easy for people. And I think that's like a lesson to all the platforms and technologies that people are using is they kind of want openness now a bit more than they did in the past. And it's almost like to get bigger, you kind of need to work with everyone. Now I've got only a couple more questions here for you, Doug, but one of them is like, there's a lot of opportunity in front of you guys. Like you've got, I would assume, probably like one of the richest data sets in the country in terms of like investing data, in terms of investor preferences, in terms of what they're doing with their money, in terms of what tools they're using, all that stuff, because you're that's what you do, right? I'm curious, like where you see, and you could break this down over like sprints, marathons, however you define, like what your roadmap is or what you're working on, what you've already worked on in terms of the technology side. Like what are you seeing as opportunity now for your platform?
Yeah, so for our core platform, there's always like, a few meat and potatoes features that people want. So the future income, predictive income, cash flow planning, that is way up there. In fact, that's the number one feature request from our customers. And we've already begun work on some of that stuff. So that's coming soon. Followed by a mobile app. So we used to have a mobile app. It was pretty basic. We knew it was basic. We took a lot of flack for it, rightly so. But you know what? It worked, and people still use that thing. But we're about to release brand new mobile apps for both iOS and for Android as well. So those are a couple of big kind of chunky feature releases that were coming. We're putting a lot of emphasis in what we call a multi-asset class strategy, because what's happened, in addition, I would say, to the rise of ETFs, is the rise of private equity investing as well. Now, this tends to be more so done within SMSFs or kind of higher net worths or family offices, who we cater to as well in our professional business. But catering for those private, unlisted, off-market assets has become really, really important for the kind of professional and quasi-professional investors as well. So we're putting in some work on that front too. But yeah, underneath the interface of Sharesight, we've got millions, literally millions of portfolios that are being tracked in real time all the time. And so the opportunity in front of us is, how do we, number one, protect that data for our customers? How do we protect the and make that data secure, which is absolutely number one. Make it private as well. But how do we resurface those insights back to investors, right? So there's a lot of workshopping we're doing right now on, okay, maybe I'm an investor and Sharesight could, using their rich data set, could identify investors like me and assist me to join a community, assist me to have a look at a benchmark or a model portfolio of kind of like-minded investors. And I could see, if I'm beating or lagging said portfolio. I mean, there's so many ways we can turn the data that we have around to provide real value for our customers, because we honestly do believe we've got smart money on the platform. The median returns of our portfolios are always ahead of the index. And we'd love to surface that back to customers again in a way that protects their data first and foremost. But yeah, there's a real rich opportunity there. And maybe that's done using AI tools, where we can interrogate the database. Maybe it's not. But you will see some AI stuff coming to Sharesight as well, namely in summarizing reports and providing a bit of Q&A. So, way down the track, Owen, it might be a world where Sharesight's more of a black box that you just talk to, right, on your AirPods, and you say, "Hey, Sharesight, what's my performance over the last 3 months?" Okay, "Hey, Sharesight, how does that compare to my cohort?" "Hey, Sharesight, what's my unrealized capital gains position on my portfolio?" Whatever. This whole hunt and peck, click and search interface concept, I think, is going to go away. And I'm really keen to see kind of the ways in which AI could help, turn Sharesight into more of what you'd see in like a ChatGPT style, Q&A interface. Yeah, sure. So what people are looking for, and this is particularly important for those portfolios that have kind of reached, apex asset allocation, and maybe we're getting the drawdown phase, the whole wealth transfer and all the analysis that's been done around that. And again, we have a lot of customers who are reliant on dividend income to supplement or if not entirely fund their retirement. So what they want is something more than what we have now in our future income report. The future income report now shows dividends that have been announced but not yet paid. What we're planning on doing is going back in time, analyzing the actual dividends that have been paid by a company, and then helping a customer graphically cast that out over time, both graphically or perhaps in a diary style basis. And the other thing is, because we have a feature in the product which we refer to quite generically as custom investments, you can create cash accounts and term deposits and fixed interest investments in there, and that will set an automated schedule of payments into the future. So we'll incorporate those into that analysis or this new feature as well.
Oh, that's cool. Yeah, it's like being able to visually see it, I think, is like one of the powers of switching from accumulating assets to passive income.
Yep.
Like that's it. In terms of like the behavioral element for that, I feel like that takes a lot of the stress away, of that's probably the biggest moment of your life financially. And you go from earning an active income to relying on some other assets. And a lot of people who don't fully understand, or at least are pretty confident, but still need that kind of, I guess, the visual kind of like confirmation that, hey, I'm going to be okay. I've got this income that's going to come through. It's a prediction or something. It's not perfect, blah, 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 blah. That I think that just provides a lot of like comfort for people, which is really valuable. Doug, I've got a link in the show notes already for people who want to join Sharesight, check out all the features, refer to the blog post and the ongoing blog post that people can just see what the kind of like, we joke on the show, Doug, that we call this like investor zeitgeist, and like what investors are actually thinking and what they're doing can be two different things, but you can actually see that through the Sharesight data and through the monthly blog post, which is pretty cool. So I'll put a link in the show notes to that. But I've got one final question, which is you are kind of, you see both sides of the fence. You see the investor and you see the technology. Like you have this kind of view of the world, which is really unique. And one of the things I really wanted to ask you is if you could have like one big and bold, so that they're both equally important, like something that's maybe a little bit out there. Maybe it's not like a sure thing. Maybe it's not even like likely to happen, but maybe it could happen. You kind of alluded to stuff with that kind of talk to your Sharesight account type thing.
Yeah.
But if you could say one thing that kind of leaves us with maybe what could happen, say by 2030, what would it be?
Now, is that question in terms of financial markets or how people interact with, say, their investments?
Take it whatever way you want.
Oh, wow. Okay. There's a lot of angles there. Well, I did say that before, and I'll stand by that. I think the way we consume information, sitting in front of a laptop, sitting in front of a phone, I think that's going to change radically. I think it's going to be much more of a immersive experience, through things like the Apple Vision headset, or even just audio, ask a question, get a response, that kind of thing. I think that is definitely coming. I would also say there's going to be so much pressure on fees as well in the local marketplace. I mean, when you look around the world, Australia still charges so much money for things like superannuation, for assets that sit on platforms and wraps and things like that. And I think that downward pressure on fees will continue. And I hope, and one of my this might be my bet, is that it was always the case that financial services and financial products were always sold to you because you kind of had to have them, right? And you never paid for them. You never saw an invoice. You never entered your credit card in an online portal to buy something like you would, shop on Amazon. And I think what you're seeing now is with these new entrants, be they brokers, with these new products, be they ETFs, I think you'll see a real shift in the way that younger investors actually actively seek out and buy investments, right? There's just been such a groundswell of interest in the share market. And I think that's going to march on and continue.
I like both of those things. I think the changing form of how we interact with technology, but also the fees thing. I think that the thing that I would take that to mean is like the transparency and the way you treat finance, whether it's financial advice, investments, whatever, is transparent and it's clear. What I'm seeing in our community, Doug, is this huge push towards not ongoing advice if they want investment advice or financial advice. Our community, I would say, there's probably 3 out of 10 that want some sort of ongoing relationship. Most, I would say 7 out of 10 do not want that. They want once-off really good advice. And if they want more advice, they'll come back in 3 years and they're happy to say, yeah, it's probably going to cost me a lot of money in 3 years again. I don't care. As long as you give me the kind of sounding board, you tell me what the fees are, I pay you up front, I'm happy with that, I trust you, bang, done. I think that's very different. And I think that has broad implications for the way people consume investments, the products they use, the tools they use. I think it's putting more of the power back in the consumer's hands, which is very interesting indeed. So, it's always good to chat to you because I get to kind of pick out some of the really cool data points and technologies. So, Sharesight.com is where people can head to if they're interested in signing up for Sharesight. There's a link in your show notes. You can go and click that. Go and get an account, have a look at the reports, and let us know what you think. Doug, always a pleasure, mate. Thanks for joining me.
Thanks so much, Owen. Appreciate it.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.